All right, welcome back to the Vanguard Neural Explainer. Today, we are unpacking the NVDA transaction matrix. It's funny how the market so often mistakes a necessary breath for a total collapse. Our objective right now is to strip away all that noise and look strictly at the structural data. We see this recurring phenomenon in the markets all the time. A stock goes on this massive vertical run, it finally pauses, and retail sentiment immediately panics, assuming a total collapse. But we're going to focus entirely on the structural reality running beneath the surface. So NVIDIA peaked at $235.74 and then corrected down to $225.32. Now, to the untrained eye, sure, this looks like the top is blowing off, but the algorithmic data tells a completely different story. What we're actually seeing here is a strategic, healthy reset. Section 1, Asset Initialization Matrix. Okay, let's dive into this. Our current operating level is sitting right at $225.32. And the absolutely crucial thing to understand here is that despite this recent pullback, the asset maintains an incredibly powerful bullish stack. The short-term averages are sitting comfortably above the medium term, and those are above the long term. Basically, the underlying architecture of this rally is completely intact. Section 2, Momentum and Technical Stack. Looking at the immediate short-term horizon, the 10-day exponential moving average is at $218.94. Listen, as long as the price stays above this level, the path of least resistance is definitely up. This 218.94 mark is quite literally the bull's critical first line of defense. It's the floor we need to watch during any kind of minor dip. If we step back a bit, the 50-day simple moving average currently sits way down at $193.07. That massive gap between our current price and this 50-day average, that perfectly illustrates the sheer, undeniable strength of this medium-term rally. It's basically a massive cushion built entirely by institutional accumulation. And just to confirm, we aren't looking at some low-volume flow upward. Check out the MACD. It remains strongly positive at 9.33. That means upward momentum is still aggressively driving the price. Yeah, it's slowed fractionally alongside the recent price cooling, but make no mistake, the engine is still fully operational. Section 3, the ultimate macro baseline. Now, what's really interesting here is the 200-day simple moving average. It sits strictly at $185.96. This is the absolute baseline of the macro trend. Honestly, as long as the current price stays above this line, the overall macro regime remains aggressively bullish. The broader trajectory hasn't fundamentally wavered one bit. We also need to look at the RSI. It recently peaked at an overbought level of 76.72, but it's actively cooled down to 64.66. Far from being a warning sign, this is actually a fantastic, calculated momentum reset. It gives the asset plenty of room to grow without the risk of an immediate crash. Section 4, Geopolitical Risk Assessment. Okay, so here's where we see the primary tug-of-war happening. On one side, we have the structural AI supercycle, completely fueled by the massive potential of H200 chip exports to China. But on the other side, we've got immediate geopolitical friction. A recent Trump-Xi summit ended without a formal deal, and that caused the market to drop 4.4% almost as a reflex. Now, we aren't taking sides here. We're just strictly observing the data. The market is basically weighing this massive, unstoppable long-term demand against some very real, short-term diplomatic gridlock. Let's move on and see how this builds into an immediate, high-stakes timeline. From the May 14th peak to the current cooling we're seeing, everything is marching relentlessly toward May 20th. That's the NVIDIA earnings report. Right now, the entire matrix is caught in this high-anxiety holding pattern, just waiting for this massive binary event. Section 5, Fundamental Valuation Check. The financial reality here is just staggering. We are looking at an explosive 73% year-over-year revenue growth. They've got this absolute fortress of a balance sheet generating over $58 billion in free cash flow. And a return on equity over 100%. That literally means the company is exceptionally efficient at turning shareholder equity into pure profit. Bottom line, they maintain complete pricing power in the AI infrastructure space. So, the crucial point is this ongoing debate between the bulls and the bears. The bears are arguing the law of large numbers, right? The idea that a $5.46 trillion market cap simply can't sustain linear growth forever. But The bulls? They point directly to a forward PE of just 19.82 and a PEG ratio of 0.75. In the growth investing sector, those numbers scream that the stock is undervalued relative to its earnings velocity. Essentially, the earnings are actually outrunning the stock price. And institutions absolutely recognize this. The volume-weighted moving average stands at $213.15. Because our current price sits above this level, it confirms that all this recent price appreciation is backed by massive institutional buying volume. We're talking about accumulated, heavy-hitting capital supporting the trend here, not just retail speculation. Section 6. Final Transaction Proposal. All right, here is the actionable matrix we've derived from all this analysis. The clear recommendation right now is to avoid deploying a lump sum right before the earnings report, simply because of that unpredictable binary risk. Instead, the strategy is gradual scaling. Look for an entry zone between $219 and $213. That presents a fantastic opportunity to acquire on short-term volatility. Our resistance target remains that recent high of $235.74, and we're putting a strict stop-loss just below the volume-weighted ARG to protect capital. And this brilliantly illustrates our final consensus output: overweight. Maintain your current positions, but systematically buy the dip if we enter that 213 to 219 range. It's a highly structured approach to what is going to be a highly volatile event. You have to respect the risk for sure, but definitely do not bet against a structural supercycle. So, what does this all mean? It leaves us with the ultimate question. We've got the data, we've got the levels, but at the end of the day, the market is a living entity. Will the May 20th earnings report validate this totally unprecedented, generation-defining valuation? Or is this unstoppable AI supercycle finally about to face its first real test of gravity? Keep a close eye on those entry zones, stay focused on the data, and I'll catch you in the next explainer.